Good morning. I am Mark Sebastian, your only option. I'm joined by Alicia J. Leslie, the Queen of Candles. This is Option Pit Live, and it is non-farm Fridays. The numbers are out for non-farm payrolls. 353,000 new jobs. The expected was 185,000. The unemployment
Wow.
rate, 3.7 versus an expected 3.8. This is a huge beat for non-farm payrolls. Just a
Sure is.
massive beat for non-farm payrolls. A really strong number. And of course, on that news, the S&P 500 had been up 30, is now only up 13. The previous month was revised up from 216 to 333,000 as well.
Wow.
Average hourly earnings expected 0.3, month over month 0.6, 4.5% year over year versus the expected 4.1. This is a massive beat. And if you and I were talking about this yesterday, Alicia, that Fed fund futures were still, even after Powell spoke on Wednesday, pricing at about a 38% chance of a rate cut in March. That is what a big chunk of this rally laid its hat on, the fact that there was going to be a rate cut in March.
Which all along I thought was pretty crazy for the market to believe that. I mean, we need to have some kind of time for it to settle in, the changes that
Yes.
they've made. I mean, they would be accused of pure manipulation, I would think, if they were to just yank them back and forth so quickly.
I agree. And
So for
I
the
think
market
that,
to expect that is surprising to me.
yeah, and that's part of the reason, I think, why, that's why we're selling off this morning. That move in the S&P, we have literally dropped right before the announcement. We were trading 49.65 on the future. It is now 49.35. We've got a 30-point drop in the S&P future off of this. What is your what is your reaction, and how do you think the market kind of plays out throughout the day based on this number?
Well, so does this tell us that Powell and the committee did the right thing?
I mean,
Right?
I think it tells us that
I think it does.
the I think it tells us that the odds of a rate cut in March should still not be 34.5%, which is where they've fallen to.
Exactly.
Um,
Exactly. Where the
yeah,
exuberance in this market's coming from. Well, but we still have now, let's take a look at all those massive, what's Meta doing? Meta was up
yeah,
$58 overnight. Oh, now it's up 68.
yeah. The earnings have been massive. The earnings out of primarily Meta and Amazon had a big beat. Apple, and we'll talk about these in a touch.
Well, I was
Um,
just saying the counteraction of the,
yeah.
how much can these carry the rest of the
So,
market?
uh, Alicia, you and I had an event last night at Option Pit, and one of
We
the things
did.
you told me was watch out for Apple. And what was the price that you told me to look out for?
And Apple.
You
Well,
said,
we have the 200-day coming in right around 182.60.
yeah, you told me, and then you said, watch out for 180.50 was the number that you gave me.
Right.
We are
Below the
trading
200-day, yes.
yeah, we're currently pre-market. Apple is $180.48. So it
Yep.
is
I have
at a breaking
180,
point.
180 half basically.
And so Apple's down 3%. Meta is up 17%. Just absolute bananas. It's a really interesting trading day. The S&Ps, I'm going to be interested to see if they can hold this rally. Bonds are getting annihilated. The 10-year
Well,
is down over 0.8%. The long bond, the 30-year bond, is down more than 1%. Those are really big moves for the bond market. the NASDAQ probably be able to stay positive, but initially it looks
I
like
wanted to touch on bonds as we were collapsing on Wednesday. Bonds were rallying hard. It was the first day in a while that we had that, non-correlation. What's the word I want?
negative correlation.
Negative correlation. They aren't correlating. They aren't going in the same direction any longer. Wednesday was a really big day for that. If I show you my screen here, I'll show you what happened in the bonds. Here's the 10-year on Wednesday. Huge rally, huge move. And the market fell apart. I'm sorry. The market was down Thursday. The market didn't move as much. I'm getting it mixed up. So here we have, no, that's correct. That's correct. It was Wednesday. I'm right. Okay. Thought I lost my mind there for a second. As the market was collapsing, bonds were
Two are not mutually exclusive.
Okay. Back to the markets. The bonds are railing, and the bonds rallied and the market fell apart. So that's a new thing.
Yes.
Now today we'll see, if they continue to not.
I think today is the day where those bonds are going to get correlated. So, let's kind of pivot to looking at the charts, because today is I think a really important technical day for markets, right? We just saw the S&P. It was going to, if we'd opened where futures were right before non-farm payrolls, we would have been at a new all-time high.
Yes.
We are no longer there. We're only up. Futures are currently only up about, one second. I took those off. Futures are only up about 10 now, after again being up over 30. Yes. What are your levels for, we can use SPY. A lot of traders using SPY. They're not slinging futures.
Sure. Let's look at
SPY. What are your levels for the S&P in reaction to these payroll numbers? And then I want to take a hard look at NASDAQ and kind of break down some pieces there. And then we'll roll Andrew into to get some of his hot takes on these earnings.
Well, if we don't open up higher than this previous high, right, 491.5, if we don't open up there, that's going to be resistance today.
Yeah.
And the opening yesterday opened right at my support level. It closed below it on Wednesday on that big sell-off, but yesterday it opened up right there and maintained it and had that rally. So that's going to be support again. 480, 484 half, 485, on yesterday's lows.
All right.
That would be my support in SPY. But as I said, if we don't open above those highs, that will be resistance for sure.
Okay. What are you seeing in the Qs? Because I believe those will still be at a new high, if I'm not mistaken.
Qs will have, where are they now? Here, they're 424.60.
Yeah, 424.60. No, that's not that would be, that's still short of the all-time high. So the all-time high is 429.04. So there's still some room for these things to rally.
Well, watch for the Qs to close that gap and then see what happens. That gap created between Tuesday and Wednesday. Watch for it to close that gap and then see what happens. And the opening will do that. So I think we have to watch once it opens. If it retests those previous highs, can Meta blow through it? Cause it to blow through it?
It can. Well, we're going to have a couple of things going against each other in terms of the Qs. All right. So Amazon had really nice earnings. It's currently up about 7%. The straddle was pricing in. The straddle was pricing in about a 6.8% move. So call it about normal. almost in line, but it's up. Amazon is a $1 trillion company. Um, Meta obviously is up 17%. Meta was yesterday worth just over, I believe, $1 trillion. It closed yesterday worth 1.1 trillion. With it up 17%, it is going to be what 1.17 trillion dollars on this news. But even with the move that Meta is making and Amazon being up 7%, it's 1.65 trillion. So Amazon's going to be like 1.8, 1.75 trillion. So collectively, they're still worth less than $3 trillion. That is less than, they're basically collectively still worth less than Apple. And they are worth less than Amazon. So Apple being down 3% is the equivalent of, basically, for Apple to be down 3%, for Amazon to neutralize it, it would need to be up 9%. So Apple is eating up all of, in the Qs, Apple is eating up all of Amazon's earnings and some of Meta's as well.
And Amazon, I have resistance up at 172, so just a
Okay.
couple dollars higher. Meta's going to open way up here. And my pitchfork comes in about 502, 503, which makes sense, 500, right?
You know, Alicia, this is actually fascinating. People, yesterday, you and I were on our option pit lot. We were giving a webinar around 0DTE February, and I asked you, what's our upside target in Meta? How do you come up with that when it's at an all-time high? And you said, well, pitchforks. And I had not thought about that, but you know, when you're in this new area of all-time highs, how do you find levels that we haven't seen before? And you know, it's these pitchforks.
Yes, it is.
They really do. And this is an old school trader technique. Can you give like maybe 30 seconds on what people are looking at when they look at this pitchfork and why you like it?
Pitchforks were original. Well, I learned them through commodities trading. Now they can apply to any chart, obviously, but I originally learned them through commodity futures trading. But that is very, I believe it's old school, and it's funny because they're actually called Andrews pitchforks, which I didn't realize. But all you do is pull your chart out, zoom out on your chart and grab your low, high, low, or your high, low, high, depending on the direction the stock looks like it's trading. And it's more of a kind of an art than a science. You just want to play with it and see what lines up with your support and resistance levels. And there really aren't any rules. It's right here on TradeView Pitchfork. The median line is the middle line, the red line. That generally is a more significant than these other.
That's like that kind of represents the long-term trend, you would say,
right?
And then the green is kind of your, within a normal range, and then blue is stretched. Is that the way you would describe it?
Yeah, sure. Thank you. The other rule is that if the pitchfork doesn't trade all the way to the furthest rung, that it most likely will revisit the opposite side.
Oh, interesting.
Odds are it will.
All right. So that's a really cool, and you're saying the upside is $490 for Facebook here.
Nope, 502. 502. Yeah.
All right. So there is our target, folks. A brand new all-time high potentially for Meta. I mean, declared a dividend. They're buying back $50 billion worth of stock. This seems like a good time to bring in Facebook's top user, power Facebook user, Instagram aficionado, the TikTok titan that is Andrew Giovinazzi. Andrew, welcome. Welcome. Good to see you. Happy
That's
Friday.
hilarious.
The
Thanks.
TikTok Titan. That's going to be
Yes,
my new
yes, the
nickname for
That's
you.
master of
hilarious.
social media.
Andrew,
Yes.
have you even seen a TikTok?
Mm. I mean, in the Twitter feed, I guess.
And Andrew,
You know,
Andrew's
right here in the
actually
Twitter feed.
Andrew actually has negative 5,000 followers in anti-social media.
Exactly.
Um, all right. So Andrew, but now that we're here, let's actually go through these earnings. We've had some big earnings. We had Apple earnings come out. Apple actually saw revenue grow for the first time in a very long time, and yet they've got worries about China. The stock is down 3.5%. What
Right.
was your reaction to Apple earnings?
Well, I think you just hit it. You and Alicia hit it on the head. Like Apple's 3 trillion. Okay.
Mm-hmm.
Now, okay. And I have an iPhone. It's a 12 and I just upgraded. Actually, it's funny because I got rid of the old phone, right? The little
Mm-hmm.
tiny phone, which I loved. And now I got
Mm-hmm.
the big phone, but I don't have a case for it yet because I don't want to get one. But now I don't know what to do with the case because if I drop it, I'm going to break it. But anyway,
So get a case.
yeah. So I got to get a case. Anyway, it means I got to leave my house. Anyway, you know how
You can order one from Amazon.
I
It's
could,
not
but
hard.
then I'd have to go online. So it's a bad thing. So I think you brought up a really good point though, where all of a sudden now the $1 trillion companies and the 3/4 or 1/4 of $1 trillion companies, if you're looking AI growth, right? Like, Apple AI selling their phones, only can manage 6% growth. You're paying a huge multiple, right? Would you rather
Yes.
be buying AMD, a $250 billion company with potential to get to $1 trillion, right? I mean, it is what it
Yeah.
is, right? Because that's what NVIDIA did. Or do you
Yes.
want to buy Apple at 3 trillion, having to all of a sudden come up with 20-25% revenue growth? Like, do you think that's going to happen? Like, no, and that's kind of what happened to Microsoft, like in the 2000s, right? Microsoft, dominant company of the tech, let's say of the dot-com era. They got the biggest market cap. And then what happened to them? Their product line stifled, whatever, Ballmer, CEO, and they started paying a dividend. Do you remember that? Like that
Yeah.
big blowout, all
And
the traders that had those reversals, they changed the rules, blew out or whatever because they paid a dividend. All these guys that were short stock had to just come up with this huge dividend. And now all of a sudden, Meta basically kind of abandoning the metaverse, or basically they're not spending money
yeah, they're
on
not spending as much money.
innovation anymore, right?
Mm-hmm.
They're saying, okay, we're going to do $1 billion buyback or a huge buyback at the top. The dividend, I don't think, is a bad thing. But when companies like that start paying dividends, what they're kind of telling you is Zuck is like, okay, I'm rich now. I just want to live on some dividends. I'm going to go live my life. But as far as where is the innovation now? Are they going to spend on innovation, or they're just going to become more conservative like Microsoft did? And that didn't change until Microsoft basically
CEO.
reinvented their business again.
Yeah,
To
they
the
had to fire the
cloud.
CEO. Well, here's an interesting thing. Prior to earnings, Apple's multiple was higher than Meta's. Did you? Which I thought, which I was surprised by when I was just looking at this. That is just flipping this morning.
Right. Okay.
Going into earnings on a trailing 12-month, Meta only had a 26 multiple. That's a price earnings ratio. So that's the earnings relative, the earnings per the price of the stock over the earnings per share. It was 26.5. Apple's was still over 30. So
I could see Apple compressing a little here. I mean, that 6% sales growth is fine, but I mean, people are already paying for that. I mean, you're paying for probably more, right? And Apple's going to continue to make a lot of money. It's just how much do you pay for those dollars? And Meta obviously can still grow. They could change. They could do whatever. But the last big tech company that paid a dividend, the stock stagnated for 10 years after that. And personally, I would not short Facebook here at all.
Apple pays a dividend. They've certainly have slowed, but it's still going up because there's a quality chase that was not around 20 years ago with two.
Well, and Apple traded at a 15 PE for years, and now it's 30.
Yeah, I know.
So
The
it's not
multiple
like
expansion.
so. And we saw what in 2018 when Apple they cut the stock in half.
Yeah,
So
there's some risk here.
there is some risk here, but you know again, I'm not a user of Facebook at all, and not if you love it, that's cool. But as far as Meta goes, I don't think it's a great thing for a tech company that was a leading edge technology tech company, which arguably Facebook was because they kind of changed social
They're
media.
still
I
working
think.
on Reality Labs.
Yeah, but
All right.
if you're spending 50 billion not on that,
Yes.
I think Zuck got a little lesson from the last big spend, and that's kind of where we are.
All right. So let's talk about another one of these earnings. Amazon had a nice quarter. Their growth. We're seeing this growth in Temu. Amazon is kind of trying to keep up with them. They had a great quarter. And pretty really pretty interesting. They had a great one. And then the other earnings that I wanted to touch on this morning, Chevron is raising its dividend, and Exxon had earnings this morning. They're both down a little bit. Oil and gas continues its terrible 2023 into a continuation of a bad 2024.
Yep.
What are you getting? What Amazon's telling me the retail, the credit card spenders are still there. And clearly the non-farm payroll number. I want to get your opinion on that in a second here, Andrew. The consumer is still there, and oil and gas, they can't seem to get off the mat. What were you picking up here, Andrew?
Well, the oil and gas industry is like the government hates them, so that doesn't help.
True.
But we still need oil. We still need gas. I just recently they had a moratorium on export permits for natural gas. Literally, 2 years ago, there was no natural gas in Europe because they cut off the Russians. So, again, none of this makes sense. But I think long term, that's still going to put pressure on oil prices to go up. The thing with oil companies is they make oil and they only make more money if prices are higher. I mean, they could, and I believe they have cut back on a lot of exploration. I mean, relative, it's probably started up again now the price is higher. So I think all the big major oil companies you buy them when oil prices are low and you sell them when oil prices are high.
I'm looking for some.
We're stuck in the middle, I think, right now.
I'm looking for some consolidation in the business at this point. I think we're due for some more,
like the miners,
some more consolidation.
Yeah. I see that.
All right, now let's get back to these non-farm payrolls because Andrew, I'm sure you saw they were blow the doors off good,
right?
And in response, CME FedWatch tool leading into the announcement last night, Alicia and I were presenting, talking about 0DTE Fed. And I had mentioned that traders thought there was a 38% chance of still a rate cut in March. Now that things have had time to settle, that has fallen to 19%.
Yeah.
Which tells me that my opinion, 19% of people are wrong. But on that, and Alicia, please chime in here as well. The bond market is getting just obliterated. I want to get your charts here on the bonds once Andrew gets through here. The bond market is getting obliterated right now. The 30-year is down almost 1.5%. The NASDAQ is now only up about 0.4%. The S&P looks like the S&P futures look like they're about to go red.
Yeah.
And on it, we added 500,000 jobs over the last 2 months, and we're selling off. Andrew?
Well, it's the good news is bad news thing, right? Everybody thinks rates are going to go lower. Like Alicia says, I agree. Like, I don't see how that's possible. And this is the reason. I mean, where is a lot of job growth coming from? Okay, the government is spending $500 billion a quarter more than they take in. Now, even, you don't have to be partisan, but that's hard to keep. It's hard to keep up with that.
They all do it. They all
it
do
really
it. Both
is
sides
hard.
spend.
Oh
So
yeah. No,
the good
everyone
part
says
is,
the other side's spending too much, and then they both just spend.
They're both
right,
guilty.
right. You spend too much. We spend too much. You know, you're not spending like you spend too much. You don't
It's
spend
like me
enough.
complaining about my wife. My. It's like me complaining that Lauren's buying too much, clothing or something up, and then she looks at me and goes, "Well, do you need that boat?"
You just do it in one shot, like one
Yeah,
big one.
exactly. Yeah.
So, and I think that's
yeah.
where you are. But the good part is, and this is what we've seen. I mean, everybody's excited in the morning, maybe because they're going to get something easy off of a lower the unemployment number is not enough, right? It's not a Goldilocks number. However, it's still job growth. Jobs pay money. That's good for the economy. And I mean, I hate to say it's going to be like another dip buying opportunity because it's ridiculous. It's
Oh.
hard. It's hard when
Right,
so
right.
much money is being pumped in that we don't rally. Although
Futures just went
earnings are
red.
there. The earnings are there from companies that get people excited, right?
Futures
So,
just went red.
wow,
We were up 30 over 30.
almost 1%
And
this
on
morning.
this. That is they are just destroying. Alicia, where are we're now red on the day. The bond market, we're going to look at the 10-year or the 30-year.
We can look at both. Here's TLT. And
It
as
is
you can
getting
see
obliterated.
yesterday, pardon me?
Yeah, I mean, it's getting obliterated today.
Yeah, here it traded yesterday right up to my resistance and looks strong. Look how tremendously all these bullish candles is very strong. Look at the volume supporting that rally. Today we're opening down here, 96.38 down $2.
Yeah.
I do have support in TLT coming in at 95.87, so about 50 cents lower. But you're right. Bonds
Yeah.
are getting hammered and crude has gotten hammered. Let me show you well, here's
Yeah, the 10-year.
here's the
Oof.
10-year note right now.
Woof.
Yes. Double top, right? You got the double top there. This could be a bigger pullback. Crude, USO yesterday I was watching. Look at the 5-minute on USO yesterday. And
Well, was that from
I
the
could not
ceasefire?
look at, pardon me?
Wasn't there a ceasefire agreement? And I thought
No,
that was kind of
there
like
isn't.
there
There is
isn't.
no ceasefire
Oh,
agreement.
there isn't
There's a
one. It was
rumor.
like it was fake news.
There's a rumor.
Oh,
Look at how fast it fell. It
Yeah.
was pretty incredible. And it's down again today. And there still is, there's the crude futures chart. I, for the life of me, could not find the news. It's a rumor. So in this case, sell the rumor, buy the news, maybe? I don't know.
Yeah, maybe.
That's
maybe they're
ugly.
expecting it to happen.
Yeah, I mean, I guess that would make a lot of sense. Sell the rumor, buy the news, because it would be theoretically bearish for oil. So it's almost like an inverted version
Exactly.
of that.
Exactly.
That's really smart. I'd never thought about that. With oil, you sell the rumor and buy the news.
In this case, possibly.
That's interesting. All right. Now, we've kind of hit on some I think some really important topics. I wanted to kind of talk about a couple of the trades that we've been following and trades we like for this week. Last week, I thought I laid out a idea to go long GE. Post earnings, it was down, and in the since we were here last Friday, which was the 26th, GE opened at 130.68. Pre-market, it is $135, down 41 cents. Closed yesterday up, so up about 3% on the week.
Very nice.
I do still think there's more upside. I'm looking for it to go higher, and I'm going to go back to the well on a stock that I like. If you want to share my screen, this still remains my favorite stock for 2024 in the tech space, in the AI space, a stock that I think is going to clean up. Again, if you want to share my screen, Oh, I'm not sharing my screen. That is why you can't share your screen. Why? How dare you? The stock that I'm looking at is Qualcomm, and they had great earnings. Obviously, it had gotten a little bit, I think, near term over pumped into earnings, but their earnings were really good. They've got this growth prospects in some of the chip business they're working on. Phones still need them. Their movement into the computing business and away from just mobile technology, I think, is going to be a big win for Qualcomm. And we talked about multiples. After blowing the doors off of earnings and pulling back a little bit, Apple still in the 30s, Qualcomm 20. This is a chip maker with a PE of 20. Find me another one that is even close. AMD, 325. NVIDIA. Now, this will drop, but it's 80. Marvell. Marvell loses money, so they're not a good one. Who's another good chip maker we could look
MU.
at? Who?
MU
Micron.
or Intel?
Oh yeah, Micron. Micron loses money, so they did that. Yeah, Intel, they're back to positive. Their PE is 115. Have you ever heard of this company ARM? They don't have numbers yet, but this is one that AMAT. AMAT's another one that would be worth looking at it in terms of potential chip company, and TSM has too much, I think, global risk to it. But I think Qualcomm has room to rally. Leisha, do you have any? So if I was going to go long Qualcomm, and full disclosure, I'm long Qualcomm, and my family is long Qualcomm. I was looking at the March 145 calls. They're about $3.20. I like those as a potential. Put a $3 bid in those. This was 158 at its top. I don't know if it's going to go there by March, but I think it could. All it takes is another little rally here. So I am a buyer of the 145 calls for about $3. Sell some when it gets to 6, and then see how high they can go. Leisha, what did you want to kind of chat about with your idea?
I was looking at Boeing. Boeing looks like it's possibly trying to start its recovery, begin its recovery. It's just completely collapsed, had so much bad news and everything else. It does have earnings. Oh, it had earnings already. Okay,
yeah, it did. They were very disappointing.
Consolidating
and I don't know if you heard about these jet doors that they've got.
Yes, I know. That's what I was. But I think that it's consolidating here. I think it may try to recover here. If it can trade above 215, Boeing could be ready to recover.
There you have it.
And Delta Airlines, real quick. That's a very interesting chart. All three of the moving averages that I watched, the 21-day, the 50-day, and the 200-day, are all converging right here on Delta. They're all three right there.
Oh, wow.
And it's also in what the Japanese call a box range, a consolidation coiling here. I think it's ready to pop from here and possibly trade 42.5, 42.60.
Wow. There you have it. Well, speaking of airlines, while some airlines may lose doors mid-flight, and others may have to make emergency landings, one airplane that will never lead us astray and always land us home safely is a certain vehicle that is driven by Andrew, and that is Andrew's trading vehicle. In this segment, Andrew is going to safely take us from a educational journey to a trade idea. So with that, Alicia and I will take a little bit of a coffee break, and we'll let Andrew take it away.
Thank you. You guys can put up the first slide if you want. If you feel like it, Max. Oh, there we go. All right. So this was my trade from last week, 3M. And what I noticed was you could see on the bottom there of the chart, like vol at the 30-day vol was very low. The vol's low out as far as you can see. So February, March, April, May. I bought a strangle, the 190 strangle last week for $2 and change, I think. And you could see clearly the stock went nowhere. So on the dip on Thursday, I did buy a little stock against the position. We'll talk about that, just like what we call just scalping your gamma, basically. So stock goes down. You accumulate more short deltas. I bought a little stock, about 100 shares against the position, and I'll see what happens. Now, here's the thing. I'm only going to hold it for another week. If I don't get any action, because the market actually reacted pretty well over the last week. I mean, we made all-time highs and stuff. The stock did not participate. I'm down a little money on the trade, about $75 or something, although the stock purchase helped. But if it doesn't move, I'm not going to hold it. Even though the vol is low, it can stay low and the stock could do nothing for a month. So if I don't get any catalyst, I am out of this particular name. So I'm not going to just sit and watch my straddle go to zero. Could always buy it back a week later, 2 weeks later, whatever. But if I get no performance, I don't want the position. So, but I did give myself 2 weeks. So that's the theta risk, meaning, you put a position on, you buy some options. You have to decide what kind of risk you want to take on the position. Depending on how much you spend. If I spend $1,000 or $1,500, I don't want to really risk more than $250 on it. That basically means everything has gone wrong. The stock's not moving, volatility is going down. You're basically just getting nothing happening. So I get close to that level and I'm just out. You can always revisit. But if it's not working, it's not working. So you have to practice some kind of risk control on whatever you do. So even though I think the stock could go up, what I think doesn't really matter. The only thing that matters is if my position makes money or not. So that is 3M from last week. So as of right now, it's kind of a dud. Okay, Max, you can go to the next slide. So this is a little different story here. This is SMR. And what I want to do, the vehicle today is SMR. It's NuScale Power. It is a very speculative, small scale nuclear power technology company. Total mouthful. Now you can see from the chart, it has been higher in the past on the promise of this nuclear power rolling out. And I have a compatriot at Option Pit who's pretty good at these things. And he thinks the technology is very promising and it will get some federal dollars at some point. Again, 100% spec. But I did buy some shares. So the reason is, why buy shares over stock? So today's, vehicle, your comparison is, when do you buy the stock and when do you buy the option? And what I would say is, every option trade, you have time risk, volatility risk, direction risk, all three. Now, if I don't have any sense of time for the position, meaning I don't know when it's going to happen, I have no interest in trading the options. The only time I trade options is when I have a duration in mind for how long I want to hold an option, or if I want to sell an option, writing calls, writing an iron condor or something like that. So without any duration, I don't really want to do the option trade. The second part is price. At the time, SMR was only about $2.20. It was about the bottom. When all of this uranium, nuclear energy talk started heating up a little bit, so I bought some. Now, one thing you could see, which is interesting, which is much different than the chart I just had of 3M, is like 3M kind of had poor earnings And now the vol is basically zero. It's 1 year lows. If you look at the chart in front of you, the volatility chart on the bottom, the 30-day vol, volatility is relatively low while the stock was just declining. Basically, that's the market just saying there's no bid for the options anymore. And it's just kind of a one-way train down. Now, all of a sudden, with the stock moving up a little higher, it has brought in some call buyers. So, generally when you're looking at flow, people buying a bunch of calls on spec, it's a little more bullish. But again, without a time frame, I just don't know duration. So in this case, I just bought the stock instead of buying the options. So, and also with the options, you buy you spend, $500 on calls or something like that. You could buy 100 shares of the stock, but you're buying calls that are like trading $5. So you almost need a double for the calls to be worth anything. So I just don't think it's worth the money to buy the options. And instead I bought the stock. But number one is I just don't have a duration in mind for this. And when I have no duration, I just do the underlying. So there we are. That's my vehicle for the day, SMR, and just buying the stock instead of the options. Even though this is an option show, this is one time where I'm trading the stock instead. And
Well,
that
Andrew,
is the trading vehicle of the day.
Andrew, thank you for giving us a ride in your vehicle.
Sure.
I want to close out by sharing a trade that we saw yesterday. Now, Microsoft had very nice earnings. It initially sold off, and then has since recovered. Prior to the sell-off, it had touched $415. If you want to share my screen, the implied volatility is about as low as it can get. And yesterday, I thought these were very aspirational, and I want your opinion on these guys. A trader bought over 10,000 Microsoft April $480 calls for 72 cents outright. This is so outright means no stock, no nothing. They just bought calls that were 20% out of the money. This is as aspirational a trade on the world's most expensive company that I've ever seen in my entire life. It does have one more earnings in it. This is just cuckoo bananas, that type of move in Microsoft. But I thought it was really interesting. That is where we are right now. We're starting to see upside calls, the value of upside calls exceed protective puts in some of these names. Pretty darn aspirational. Alicia, can Microsoft get to $480 on your pitchforks?
It's funny. I'm looking at it right now. The next rung is 435. The very top is only 467, 468.
Now, if it can get a run to, let's say, 440 very quickly, they can make a lot of money on these calls without ever touching $480.
Yeah.
It has to do that in the next 30 days. Otherwise, these will start to melt. But pretty darn aspirational. Andrew, what's your hot take on these Microsoft $480 calls?
I like your analysis there. Like can Microsoft go up 10% in 3 weeks or 4 weeks? Yeah, I think so. And then those calls would maybe triple in price. And the thing that might happen is folks would come and start buying more out of the money calls, which would keep the vol up. So, and I think
true.
that's, and that's I'm not even going to call it late stage bull market. It's just, that's bull market trading. People are like, okay, I'm going to buy calls and see what happens. Are they crazy? It depends also how they choose to potentially finance those calls, or if they got rid of stock to buy them. So,
or if they're how they manage it, really. Like if these triple and they don't sell them, then they're dummies.
Then they're a little crazy about that.
Yeah, they got to sell some.
But again, if you look at like from a vol point of view, do you really think Microsoft volatility should be trading at like a 1 year low level? And I think all these vols are mispriced because the stocks just kind of keep going up and start moving to the right side of the curve. So
I am gonna
I think
I'm gonna set up.
volatility is kind of mispriced in these things right now, and that's something we'll discuss anyway in trading desk.
Yeah, today in trading desk, I'm gonna set up a trade in Microsoft to go long and be hedged at the same time using this low implied
Yeah,
volatility.
I think that's an excellent idea.
They'll thank you. I think we're gonna do it. Trading desk is our service where Andrew and I trade volatility together. We meet every day at 11 o'clock Eastern time with a good group of people trading S&P, VIX, and volatility on mega cap names. This is going to be one we're going to address today.
And by the way, speaking of VIX, it's up on the day on a
I
Friday
know.
after all these numbers. I'm
Yeah.
curious to see if it holds.
I think that the VIX is at a very interesting spot. All right. Well, we're about out of time right now. As we're filming this, S&P futures are still flat. We're up about 3.5 points. I think they're going to take them red again. NASDAQ futures are up about 0.4%. The long bond is down over 1.5%. That is going to be a weight around the neck of the market, and the 10-year is down almost 1%. So I think that if bonds don't recover, I think today could be an interesting turning point for the market, and I'm going to be looking to take advantage of that. All right, Leisha,
right.
what do you? So my lean is the Nasdaq will probably close green still with these crazy meta earnings, but decent chance that the S&P goes mildly red. Maybe not a huge red day, but it could be like a doji day, something like that, a turning point day. Leisha, what are your thoughts?
I was thinking the same thing, that maybe it could be a tighter range day, just because there seems to be some pretty good confusion here. Let me just show you look at the 10-year note. The chart is terrible.
Yeah, we
If
could lose
the
our whole
market
rally.
decides to follow bonds again, they look terrible.
They do look terrible.
But I think it could be a tight range day also.
Andrew, what are your closing thoughts? What are your closing thoughts on the market today?
I just want to see if they bid the vol up. If they take volatility up. We've just had major announcements this week, and VIX is kind of still where it is, which I find odd. So that's usually the market is waiting for another shoe to drop. So I think that's a good tell for the day. If VIX stays green, we're not going to get the rally. The rally I think we're going to get, because every Friday we just buy it. It's like ridiculous every Friday. So that's what I'll be looking for. So VIX can hold up. I don't think we see the rally.
All right. Well, speaking of, it's 8:19. We are out of Central Time, 9:19 Eastern. We are out of time. Andrew, thanks again for joining us as always and giving us a lift in your vehicle. Have a great morning.
Thank you very much.
Leisha, I hope you have a great trading day.
Thank you. You too.
All right,
everyone. How about
see
a
you
great
later,
trading
Leisha.
day for
Everybody,
everyone?
have a good day.
All right. So for Andrew, the antisocial socialite, and for Leisha Leslie, the queen of the candles, I am Mark Sebastian, your only option. This was Option Pit Live. Have a good one.